have.
Oh, there we go. We are
live on Facebook and on YouTube. Good evening if you're over this side of the world. If you're on his side of the world, good afternoon, correct?
Yeah, exactly. Good afternoon. Good morning. We've got so many people.
Mate, you sound like a man that's just had a baby.
Yeah, I'm tired, man.
Oh, what is going on? What?
Cold coffee.
Just checking we're live on Facebook.
Up on a few of these in the fridge when I can't go out. I've also bought this extremely strong coffee.
How is it extremely strong compared to what?
It's called Strong Shh. that's the name of it.
Who on earth's name did the branding for that?
Well, to be fair, it does stand out when you're looking at.
Yeah.
I was like, you know what? I'm going to order new coffee. I'm just want to, and so I was just looking through, and then that popped up, and I thought, oh, that's a bit different. And then somebody in the reviews put, if you've got kids that are waking you up, this is the perfect coffee. So I thought, that's it. I'm sold. There you go. That's all I needed to hear.
So how much stronger is it than the average? Oh, by the way, guys, Andy and I haven't really spoken much the last few days, so we're just having a bit of a chin wag and a catch up.
Where's the music, mate? Where's the music to get the people
going? We're having a chat. We're having a chat. We'll build it up. We've got loads in store on the show today, so you're definitely gonna have your boxes ticked, that's for sure. But I'm intrigued by this because you are a coffee connoisseur, if I may. I mean, I know that's a big label to put on you, big expectations, but you're the man that can handle those around coffee, right? So what's so good about this stuff that's made you put your hand in your pocket?
Well, like I said, I mean, I think partly as well, I was just a little bit bored, and I was just thinking, what should I do? I thought, what can I buy? And I was like, do you know what? I've been having the same coffee all the time, so let me go on Amazon. As I was looking, I literally just typed in strong coffee, and that came up, and it's some black, very different. It stands out. Like everything else looks the same. So I always think this as well, like with any drink, that, you know, even when you're selecting a bottle of wine, if you've never had it before, how do you know it's any good? So you can't really.
Well, if you go to a nice restaurant, they give you a sniff and a swirl, mate.
No, once the bottle's
you've just outed yourself there. You've just outed yourself as a McDonald's.
Yeah, once the bottle's open, you pay, mate. There's no trying unless you go to a taster.
Well, you need to become friends with a good sommelier. Oh, I can't. It's been a long time. Please, someone cultured and educated. I know how to spell it. SOMMALIER. You know what they are, don't you?
Don't try and put this on me, mate. If you can't.
I thought you were going to rescue us both, mate, and then no. We have both failed miserably. I know how to spell it, I just can't pronounce it. I guess that's my issue. So this seems like a good segue for the music. Let's play some music.
I need music. Otherwise, I can't deliver.
Well, we better play some then. You know, this is the start of my week officially when I hear this song.
That's it. You know, can I tell you, my kids love this song. They listen to it all. You know, like we give them, we let them go on YouTube on the TV.
Yeah.
This is one of their chosen songs that they put on regularly. Because we used to watch, they just heard us play it and they love it.
Really?
Yeah, that's how much we loved Money Heist.
That is funny. Wow. Are they looking forward to season 5?
Well, they're not watching Money Heist, so we're not that crazy.
Glad to hear that, mate. Glad to hear
that. I'm not going to obviously say the name, but I've got one of my friends actually lets his kid watch. What's those things that you watch? Those cage fighting things. What's it called? The sport. Cage fighting.
WWF.
No. not WWF, the other one, the crazy hardcore one. I don't
WWE.
Cage fighting.
UFC,
that's it, yeah. And he's been letting his daughter watch it since she was like 3-4 years old. I said to mate, she's going to kill you one day. You crazy.
If not, maybe just submit him before she goes out, starts dating boys. She'll be like, Dad, give me a hug. Oh, just sleep. Put him in a daft choke. That's excellent.
Yeah,
that is pretty well.
Seriously. I said, mate, my girls are watching like Barbie stuff, and yours is watching bloody, yeah. Obviously, I'm not going to say the name because I don't think you're actually legally allowed to do that and let your kids watch that.
Well, I don't know if that's true, but
I don't think it's
Nick's tuning in on the Gold Coast, and he's saying that's crazy. Zachariah's in the house. I think he's tuning in from Japan. I think he said last week, which is very cool.
He is.
Yeah. Which is awesome. So, yeah, he was right with UFC. Brucey's in the house. Jason's in the house. Good day to you, Jason. Oh, look, the love between a father and daughter knows no distance. Not now underneath, that should say not even the UFC. That's crazy. I think that's probably I don't know how to describe that. I guess that parenting style is interesting. Pretty relaxed, should we say. Slavomir's in the house. Good to have you with us, Slavomir. Facebook user, if you're new to the group or for anybody else joining us live, hi, my name's Gavin, the host. This is the man, the myth, the legend, Mr. Andy Demi, professional trader of over 18 years. What he doesn't know from the world of the hedge funds and professional trading floors, then you could probably fit on the back of a postage stamp. And every week we test him. We get all of these little golden nugget bombs that he drops regularly. And yes, we've got some more to drop today. So new Facebook user, please click on the StreamYard link so that you can show your name and your face like Mr. Simon Plummer, who is our first commenter of the day. So with that being said, let's crack on with the show. Also got Dan Tyler in the house. Good to have you with us, Dan. So there's quite a lot to unpack today. First thing before we jump into the live chart analysis, I know there's probably not a one-size-fit-all answer for this, but I just want to I was thinking about it today. I was like, I know why you love cryptos after trading FX for so long. I know, and having traded cryptos myself, going back to Forex, it's great for me because I love the range trading, and especially the way that you show me, like with picking the highs and the lows and using Fibonacci and DTRs and getting those high probability trades. But man, do they take a long time to come into play? Do they take a long time? I just feel like I'm fishing now. I've got everything set up and I'm like, if it gets there, it's a high probability, low risk play. But man, now it's just like, set the alerts and then you're done, which is great because it doesn't take up a lot of my time. Whereas before I was like getting really flustered and kind of like overwhelmed with the amount of like intensity of it all, which I love. This way round, I've got more time, but it's like waiting for a fish to bite on a rod where there doesn't seem to be any fish in the water. And you more than anyone else probably know what I mean by that, right?
Yeah, but you know what? I think all types of trading, even that type of trading, if you're busy and you've got other things going on in your life, it's actually perfect because you just wait. You're not actually waiting for it. You've just done your work, and then at some point when you forget about it, it's going to come to your level probably, and then you get filled, and at some point it will hopefully go to your profit target. So it's really important that you fit whatever type of trading style you're doing. It has to kind of fit around your life. So like if you're somebody who isn't busy, let's say somebody who's retired and hasn't got anything to do and wants to be active in the markets, that kind of trading is going to be quite tricky because you're going to want to get more involved because you're like, well, I'm not doing anything, so it doesn't feel natural to you, right? So it's like, you know, for my lifestyle right now, it's perfect that So like, and I even for cryptos, I do that. Like I'm not spending a lot of time on my screens, like trading in and out. I'm more doing the work so that I'm prepared for those opportunities. And then when it pops up, I quickly look at it. Yep, that looks fine. Makes sense still. And then I just take the trade. Like I said last time, I mean, sometimes it would just take me 30 seconds to a minute to say, yep, it's fine. And then maybe 1 or 2 more minutes to just place the risk and the stop and the target, because all the work has gone in, and then maybe it's hit that level a week later or a few days later or even 2 weeks later in some cases, right? So, but yeah, but if that's not, but right now it's like for people that are working, that's great. But if you're doing this full time, you need to probably add in something else to your day. Otherwise, you're going to get frustrated because you're going to be feeling like I'm not doing anything with my time.
Well, I guess it depends, right? If you're hitting, so if someone's goal is, even if they're retired or they've got a bunch of time on their hands, if their target is to hit 10%, become a funded trader, and then you're living off that 10% and you're doing it from this way, like this kind of part-time or less than an hour a day, I can see how it works. It's just, you've got to just set everything up, put the lines out, put the alerts on, and then wait for them to get triggered. But one interesting thing that you said there, talk us through, because, you know, some people might not quite believe it if they're new, that it only takes you like 30 seconds to a couple of minutes to actually place the trade. Obviously, you've done the work leading up to that. So you've done obviously a session to identify, you've put your alerts out. But tell us, what is it that goes into your alerts? Like, do you put your entry price, your stop loss, and your target price? What is it that you'll kind of put into your alerts so that it's so easy and fluid for you to do if and when the alerts come up?
Yeah, I mean the easiest thing for people to do is to use pictures, and if you understand what you're looking for, it's pictures immediately tell me what I need to do. So,
right.
And what and the thing with the alerts as well is that so that you've got to be smart so that you don't have to keep doing. So there's particular setups. So it's like I might go and look at the charts and then I think, oh, this is a great setup. So I want to buy this at the 618. Everything is aligned perfectly, right? So that's when I'm looking for a specific setup and I'm ready to trade it. But you should also have alerts at areas of interest that are not particularly setups, but they might be setups, and that might take a little bit more time when you actually get the alert. So for example, if you identify a really reactive line and you're like, wow, okay, every time it gets here, it bounces. Every time it gets here, it bounces. You might want to put an alert on that line, but you don't have a setup at that point. You could just take a picture and just say, right, there's a reactive line. And so it comes there and you're like, okay, great. Now I'm going to have to jump on my charts and see what else is there, like what's going on underneath the surface. And you could just look at your different bits and say, well, actually, yeah, I've got 2 or 3 things here. This looks like a nice idea. Maybe it's just hit the DTR. Maybe it's oversold on the stochastic RSI and it meets 2 or 3 view conditions. And then you could set the trade up. That might take you maybe 10, 15 minutes to set up. Whereas the other type is like, you've got the setup. It's there. You just don't want to pay that price. You need it to come to this price. And everything else is perfect. And so the only thing you've got to look at is once it gets to your price point, is it doing what you thought it would do? It hasn't just blown through it, for example. That's the only thing you got to check. Like nothing crazy has happened. It's just blown through it. Or some people will just put the order on. So you could put the order on and you don't even need the alert. So you can put the alert in just to go and have a look. So once you've been filled, in case, if you're really, really busy and you really like the setup, then you have to sometimes just put the order in. But I like to still put the alert in because I want to go and see what's happened once I'm in. So it might be a case of I put the order in and then I'll put an alert to say, hey, you've probably just bought, whatever. So go have a look at it, that kind of thing. Because you don't get alerted by MT4 or TradingView if your order's been filled, not unless you do something custom.
Interesting. So that was a good point that you say about just setting up these zones for alerts on the zones, not specific plays, and then go hunting for them. That makes a lot of sense. So presumably you would do that on the weekly or the daily then, right? Rather than and then go into the 4 hour and the hour to find the actual setups?
Yeah, predominantly. That's not, predominantly, I guess. Not necessarily, but predominantly. So like sometimes I might do it on a market angle on the 4 hour, for example. Like,
okay.
Where like I'm thinking, okay, it's been acting as resistance, it might act as support if it pulls back to it, and I like this up, so I might just put an alert, because maybe I think, okay, I want to buy this, but it looks like it's at a high point. Maybe it's just hit the market structure D and it looks like it's going to retrace, but I want to buy it, and I'm looking for different areas, so I might put it at different things, put 2 or 3 alerts, and one of them might be a 4 hour angle line. But again, I haven't got the exact setup yet. It's just I've got some ideas. Okay, maybe if it goes here, maybe if it goes here, and I'll just be alerted and then take the picture. So it just keeps prompting me. So like if I'm busy, because the reality is if I've got other stuff going on, I won't remember that chart. Like I won't remember to go back to it. So I just need 2 or 3 prompts. So one of them might be an early prompt when I'm not really keen to buy it. So it might be at the 38.2, but it just prompts me, reminds me, okay, listen, we're getting a bit closer to your areas of interest, that type of thing. And it just stays on top of mind. So I'm prepared. Most of the time you should be preparing. 80% of the time is preparation, 20% is execution. So it's like, if you're not, you shouldn't be trading more than preparing, basically. So like if you're just jumping into the markets all day long without that preparation, you're probably not making the returns that you want, most likely. So most of the time it's just preparing, waiting, and then pouncing because it's a great trade and you feel it's a great trade because you've done the work for it. So it's like, that's how you start to get that confidence that it's a great trade. And when the thing is, that's what I was saying before about what you mentioned there, like, okay, but wouldn't people want to just do half an hour a day and then just do nothing for the rest of the day? The problem is that most people want something to do with their time. And so you end up messing your trades up if you've got nothing else to do. That's what happens a lot. So it's like, you place those trades and then you're bored, nothing's happening, you've done your work, and then you go in and you start to do stuff that isn't in your plan, and you're just using your time as effectively, but you're not actually following a plan anymore. That bit is just, for the sake of doing something. So that's why I say, like, you need to plan your time so that you've got, so reverse engineer it, a little bit of advice. Like, what if you were working 1 hour a day and making, I don't know, the income that you need, so say 5K a month, and you only had to work an hour a day and you were doing it consistently? What would you be doing with your time? What else would you be doing? And really think about those things. Like, most people will probably draw a blank. Some people will know, but a lot of people will draw a blank. Like, not on a consistent basis, don't forget as well. Some people might say, oh, I'd go on, holiday, or I'd go to the gym, or I'd go whatever. But on a consistent basis, that's important. You need to do something with your time. So whether it's doing another business, working for somebody else, doing something with your time is important.
Yeah, let us know in the comment section, guys, what would you do if and when you get to that stage? What is it that you're going to be doing? And I guess for most of us, like, that would be amazing to have that freedom. And obviously, having worked remotely and traveled around the world for the last few years pre-Rona, I can. It's an amazing lifestyle. But you definitely need to have that structure for sure. Let's just check in with the comments. Actually, Brucey's saying he'd be washing his Lambo. What
all day, mate? You'll be washing it all day. I think you'll be a bit bored.
Oh, he has put a sensible answer in as well. family time, or maybe the kids would be washing the Lambo and you'd be watching them whilst they were doing it. I'm not sure. Zach's also saying he would playing Go. I'm guessing that must be some sort of video game. I don't know what that one is. Riding Go. Maybe golf.
And he thinks he doesn't need to write the LNF.
Do you know what? I'm very tempted. I'm tempted to get. I left my golf set when I went off. I left my golf clubs in my parents' house, so I'm very tempted. I've been driving around like with the missus, and the golf courses are like the most perfect summer days in the UK. They're like that here, and it's just like, even with the Rona going around and we're meant to be on lockdown, you see people walking around, driving around the golf course in their buggies. It's just like, and it's epic, and you can plan for a round of golf because the weather's going to be good. It's just like, it's definitely something that maybe I might look at again. So Nick's saying a board game. That would be a freaking long. That would be like Stratego or Risk or something if you had that much of a if you had that much time. But look, I just want to segue into another part of this overall question in this show is, so is it possible to say how many trades you should look to take a week or a month? Or is it not really, you can't say, look, every round peg fits into this round hole, and you can't really look at it like that because one person might do scalping, one person might do swing trades. I guess if we reverse engineer it to being able to pass the funded trader assessment, that's the angle that I'm coming from. How many trades do you need to do? Because it's like, I've got these alerts. Some of these trades look great. I'm waiting for the 61.8 pullback. There's confluence on the 61.8 or the FIB-D completion is on the daily 618, and the FIB-D completion is on the same area on the hourly or the 4 hour. And there's some confluence on some market channel lines or some support and resistance areas. And it's like, this is great. I've got like 4, 5, 6 really decent confluence areas, but then you set your alert, and then it's just about being patient. Like you said, that 80% of being a professional is that patience. But then it's like, well, how many trades do you actually need to do a month? So from your point of view, as someone who obviously was in that position where you're like, wow, I'm actually trading full-time for a living, how do you manage to not overtrade? Obviously you follow your plan, but what if the trades aren't coming up? Do you just say, oh, well, I'm just going to wait for them to come up because at some point in the month, I'll get my X amount of trades that I need? Do you see what I mean by that question?
Yeah, I mean, the best way is to reverse engineer your demo results, probably, if you want to hit a specific target. So you need to know roughly how many trades come up for your system a month on average, and you probably need at least 6 months of data, ideally. That's why back testing is an option, so you can just go back and see how many of your trades actually are available, and then realistically speaking, you have to estimate how many of those trades you would have taken, because you're busy. I think a good estimate might be like 50% of them, probably. But obviously, once you start to trade, you'll see how many you actually really are taking a week or a month. And then once you know that, then it's about looking at your metrics. So what's your win ratio? So how often do you win versus how often do you lose? And then how much do you make? So it's your profit factor. So how much do you make when you win on average, and how much do you lose when you lose on average? So not your reward to risk, but your actual average amount. So like if you take 10 trades and on average, your reward to risk is 5 to 1, for example. So you're risking 100 to make 500, right? You might say, yeah, I've got a great reward to risk strategy. But actually, in reality, how much are you making when you do win? If it's 150, not 500, that's the top part of the profit factor. And then the bottom part is how much do you lose when you lose? So like, for example, if you're losing 100, you still got a 1.5 profit factor, which is good. Once you've got those numbers, it's literally just really simple maths, and you just reverse engineer. So you like, okay, well, if I take 100 trades and I win 60% of the time, when I win, I make 150 on average. When I lose 100. In essence, you can work out your P&L off 100 trades. And so if you're somebody who's doing 10 trades, again, you can work out how much would I make if I did 0.5% risk? How much would I make if I did 1% risk? What would my drawdown be if I did 1% risk? And then you can literally fit your numbers to pass any funding challenge based on those numbers, but you won't know it at the beginning. So people that take the funding challenges, they often don't do it with that knowledge of their own trading because they haven't traded for long enough or they haven't measured it. So sometimes it's you're going to have to either do it intuitively or you wait until you have those numbers. But this is why consistency is really important as well, because if 1 month you're scalping, the next month you're doing random trades, and then the next month you're doing some swing trades, your averages are going to be all over the place and not going to be really that relevant. So it's really important that you stay consistent with what you're doing so that you get to know your system. Even if it's not perfect, it's better to have an imperfect system done consistently than to have a perfect system done inconsistently. So you might want to write that down somewhere and put it in your head, because that's one of the biggest mistakes people make, is that they're always switching from one thing to the next thing. And they might go on YouTube and see, oh, somebody's doing this strategy. Let me try it out. Actually, it looks really good. And then you've just parked what you've been doing for 2 months. And then you're now doing something else. So now your data is all over the place. So you have to stick with something for a little while to see if it's good or not, which is really important.
Very good advice, mate. Very good advice. And then the next question that I wanted to squeeze in before we jump over to the charts and the live analysis is with regards to what was it? I've got it written down, but I'm just trying to call it market entry and timing. So I guess taking what you've just said, can we apply that rule of thumb? So rather than trying to get your entry perfect, it's better to give a few pips to have an imperfect entry if you're still going to get a decent risk reward? Or how can people kind of really start to finesse? Well, not even finesse. Just for a start, how can people make sure they get into their trades and then finesse it afterwards?
Do you know, it depends on your strategy. So if you're a swing trader, you've got some room for maneuver. So for those that don't know what swing trading is, it's like when you're trying to catch the next swing, say on an hourly or 4-hour chart. So it's like the next move up, for example, or the next move down. And often with those kind of strategies, you've got quite a big reward to go for, and you can often most people will place their stop below the swing low. So you've got your A, B, C, D. And so if you're going for the 618 and you go just above the 618, it's not going to really make a big difference to your reward to risk. So you can do that, and you can I always go with the side of caution. I'll go a little bit above where I want to get in for sure. And that works perfect for that strategy, because it's what's the difference? It's like instead of 2.5 reward to risk, you might be getting 2.4. It really is not going to make a difference to your net result, that little bit of difference. But this is important distinction. If you are trading off the lower time frames and your room for error is really, really small. So you've gone on a 15-minute chart, you've got a 10 pip stop, 10 pip target. You have to get your entry perfect. Otherwise, that system's not going to work. You can't give 2 or 3 pips because that's 30% of your stop. So think of it as a percentage. So it's like a little 5-10 pips on a 100 pip stop is 5 to 10%. 5, 10 pips or 5 pips of a 10 pip stop is 50%. So you have to think of it like that. How big is my stop, and give it a little bit of root, but with a swing trade, but with a scalp trade, you can't. You have to get your entry, and that's the difference. So you have that, but the difference with scalping is you're placing lots of trades. You're placing smaller trades, lots of them, and so that's going to allow you to still, it missed me by a pip. That's fine. Next one. So you might take 15, 20 trades a day. So if you miss 5 or 10, it shouldn't be the end of the world. But getting the right price for that strategy is imperative. Otherwise, your system won't work. Your numbers just won't work.
So to get those, and that was a really good breakdown. So hopefully that's made sense for everybody watching, whether you're live or on the replay. Hello to all the guys watching on the replay on demand. When you say the scalping and the 15-minute chart, how many trades or how many currency pairs would you be looking at to get that velocity of trades per day?
I would.
Can you do that off just 3 or 4 pairs, or do you have to look at the full 28, 30 pairs?
No, I would suggest probably, no more than 2 or 3 if you're day trading.
Okay.
A lot of people would even just stick with one, their favorite one, and just. But I would personally go with 2 or 3 of the ones that kind of work for you, the ones that you like the most, and just be ready. Because if you want to trade really high accurate trading, you've got to have everything in place, like on those lower time frames, and that's a lot of work. Like, where's my market angle? Where's my 15-minute D? Where's my DTR? Where's my, where are the, how reactive are which oscillators are working right now for this one? That's a lot of work for one pair. And then you've got to be ready for it. So, and you have to build that plan out. So doing more than 2 or 3 will be very difficult, especially if you're new, but even for anybody. If you're using 1 or 2 screens, then definitely, probably it's better to have 1 per screen. So if you've got 2 screens, just stick with 2 so you can watch them and just see how they're moving.
Guys, bombs dropped already and we're only halfway through the show. So if you've got any questions, let us know. Just to clarify, we did have a question come in. Just trying to see it now. Yeah, I couldn't see it because it was from another Facebook user. Please identify yourself. Thank you very much. Is a demo account worth really trading because it's nothing like real trading? What's your opinion on that?
Well,
and just before you answer that, Nick has answered because he's on the program, the FX program, and he studied the cryptos as well, I believe. He was watching the course today, and Andy said it's better to trade with small amounts instead of a demo. So
they both have their place. The demo account is useful for testing multiple things, for running multiple strategies. You can do a lot even before you're confident that your strategy's got any merit. So if you're trading a demo account with these things in mind, where you're like, okay, I need to get my metrics. So you would get that off a demo. I mean, I did a lot of it through back testing, which again is a kind of demo way of doing it. The advantage of a live account, a small live account, is that you have it. What it does, it naturally makes you more interested in what you're doing. So I say naturally because a demo can also have the same thing. If you have in mind that you are about to build a system that is going to make you a lot of money, but you just need 2 or 3 months to build it. And so the demo is just going to help you build it. If you have that in mind and you're patient, the demo can be really, really powerful, because once you have those numbers, and if I'm honest, because I'm impatient, I would rather do it on a back test than a demo personally. So I would rather go test everything, back test it. Forex Tester or TradingView is fine. I like Forex Tester. I've used it extensively, where you can literally go back in time and then just trade all of your setups as they happen. And so you could do 6 months worth of data on a weekend. So you can get 6 month track record on a weekend.
That's very cool. That's very cool.
Yeah. And so that then gives you that confidence to say, okay, well, now I'm going to forward test on a live account. And that's kind of the way I would do it, because I understand. I mean, a demo account, especially if you've been doing this for more than 4 or 5 months, it gets to be a bit boring, and you start to sort of resent it in a way, like you're doing all this work for absolutely zero pay. So that's kind of where the psychology comes in. You say, well, actually, maybe I need to go to a small live account, because that's going to keep me a bit more interested, even if the numbers are small. And yeah, so and the other thing, yes, I mean, in terms of like somebody, the question said, it's very different. It's different in the sense that you're not getting real liquidity on a demo account. So, but if you've got a good demo account provider, the liquidity that, I mean, unless you're trading billions or multiple millions, it's not going to be if you're looking to trade a £1,000 account, a £5,000 account, it's going to make very little difference in the FX markets. You're going to be able to get in and out without any problem. So that's the only thing that, but it does make some difference for sure. And the guaranteed results will be on the live account. So that's what's happening. So for example, widening of spreads could take you out on a live account, and maybe they don't reflect it on the demo account. I mean, most of them do. Supposedly the demo data should be the same as the live, but from experience, it's not always the case. So from that point of view, yes, I mean, the live account's going to be better, for sure. As long as you can do the right risk management, then it's fine. So you don't want to do £100 account, basically, is what I'm saying. Like, you need to have like at least £1,000.
Awesome. Well, look, I'm just checking in with the time, and time just goes so fast when we're talking about this and dropping so many knowledge bombs. We've got 21 minutes left, so let's jump into the charts, because I want to make sure we get to go through everything that we've promised. So if you're just tuning in, so if you want to get that set up, Andy, that'll be great. So if where is it? There we go. So if you're just tuning in, guys, if you're late to the show or you're watching the replay, we've spoken about quite a lot in the last 39 minutes. So we've spoken about how to best get entry and market timing for your trades. We've spoken about how many trades you need to take a month or a week to hit your 10% target if you're going for a funded account. They're just the two main topics, and obviously there's so much more that we've unpacked in there. So if you are just tuning in, make sure you catch the repeat or the replay of this, because there'll be a lot of knowledge bombs for you. But we're going to jump in, just because of time, we're going to jump into the trade setup of the week with Mr. Andy Demi. So I believe we're going to go into the gold market and then use that as a kind of indicator of dollar strength before we do the FX news and a pro trade setup of the week. Is that right?
Yeah, I mean, we'll have a look. The other thing I want to mention here on the news is obviously we spoke last week about it being non-farm payrolls and the potential impact that it could have on the dollar, and the risk of trading on that is if it goes against you, then the likelihood is that it's going to stop you out. And if you have a look here, we were planning for the dollar to pull back, but then we got these really strong numbers. Now, what often happens is these numbers often are mixed. And so you get a little bit of a spike, and then the market ends up being where it ended up. But in this situation here, what we got was really, really bullish numbers coming out from the US. So just to explain this could have an impact going forward on what we see. So the payroll numbers were predicted to come in at 870,000, but actually there was 943,000 new jobs created, which is a stronger number than the previous month and a lot more than predicted. The biggest kicker, though, what's made this number really impressive is not that. It's the fact that the average hourly earnings didn't drop. We were predicting a 0.3% hourly earnings, but actually it was 0.4. So this is very, very bullish for the US. And that could create a market which, there might be some continued dollar strength coming into the market. Just a quick, before I look at gold, actually, let me just have a look and see what else. Before I look at gold, I just want to just bring in euro dollar for a sec. In fact, let me do something different. Let me just bring in the just want to have a quick little look at, oops. I've just, I haven't synced it. That's fine. So this is the US dollar index on the daily chart. So we were speaking about potential dollar pulling back. I don't have the exact chart here, and it has been pulling back. And you can see there that we hit that top end of this target channel here. But this is obviously, this was off the back of Friday, where the dollar has increased in value right now. So it's at an interesting point right now, the dollar. And obviously that's going to have an impact on what the other markets are going to do, including gold, which is affected by the US dollar. So at this stage, you can still say that, this is just a pullback and potentially the market could go down. But we're going to have to wait and see how that plans out. There's a little bit of support coming in. So I think the natural thing is to go at least test this line, and then we'll see where we go from there. Now, let me just go back now to gold. I know that people have been requesting this, so that's why I am covering this today. It's just in kind of, just to be transparent, like this is not really a market that I trade very often. I do trade it, but very, very rarely. So what I did, instead of, having all indicators on here, is I've just kind of actually gone back and set up a new layout here. And I've added the monthly, and I've added the weekly, and I've added the daily. So I want to show you something. So I literally had a quick little look before I got on of what's going on here. And I want to show you a couple of things from what I can see here. So the first thing that I can see is that obviously this market has had a nice move up, and it's creating this kind of flag right now, right? But the interesting thing is that it did something similar over here. So it did something very, very similar over here, and it looked like a flag for a little while, and then eventually the market pulled back. And if we kind of add in the MACD here, at this stage right now, there's a couple of things that have happened. One is we've got this, we've got a little bit of divergence on these highs. That's the first thing. The second thing is that we've had a MACD cross, which is a bearish signal. Now, right now, this market is still flagging. And I just want to show you something here. if you take a look over here, before this market broke down, it kind of went up like this, right? And I'm just going to take 2 lines here. So this one was the actual line that got broken before the big pullback. And we could actually take this and see if it kind of fits here as well. So we're below this right now. And if I just take this line to see how, whoops, one sec. Check this one. And we'll clone it. And have a little look over here. We are essentially, right now, we are just holding where this is the current month. I would be very, very interested to see where this month is going to close up. If we close, in my opinion, if we close below here, then based on history, we should be looking for this market to potentially pull back. Now, one thing we can also do is, I'm going to go into the lower time frames, because you'll see that what this is actually doing right now. Because right now, there's some bullish price action coming in because it's hit the bottom of the channel. But a couple of things that we can do in case we are going to break down is just kind of prepare. And I like to see, you know, on the last time it pulled back, where it went down to this orange line over here. So if I just take this high to this low here, I would definitely keep an eye on this orange line right there, as well as obviously the 618, okay, which is right there. And so if we do close below here, guys, I would actually expect that this market potentially is going to start to go back and test this old resistance here. If we hold, then we might be looking for this market to potentially start to break the highs. Now, if I just zoom out for a sec, I'm going to do one more thing here. Let me just see if I can plot. This is a monthly chart, don't forget, guys. So I'm just taking an overview of what's going on in this market, and then we'll go and see if there's anything else to kind of look at here. So these are the major trend lines that we've got right now. And I would also just have a look at the down move here to see what kind of speed this was coming down. So that looks quite nice, right? So we had resistance, resistance, resistance. It broke it, became support. The market rallied. So we could take this line here, project this up. And again, you can kind of use this even as a double line. Right now, for me to be bullish long-term on gold, where I would say, right, you need to be buying this, I think we need to be sitting here in the next couple of months. And then you can confidently start to buy this higher. And you can start to look for these higher points up here. Right now, we are in decision mode. Now, it doesn't mean you can't make money in decision mode. You can. So I'm just going to go straight to the daily chart because I want to make sure that I'm not spending too long. If you look at it from a daily point of view, you can see that this market is basically ranging, right? So it's channeling, and we are trying to identify basically what's going to happen next. So let me have a look and see if there's any kind of nice clues here that we can use. So if we just take a couple of points, let's see. Nope, don't like that. Let's have a little look at this little point here. Market is acting as support, support, support. That's quite close. Let's see if this had any kind of reaction here. So it did act as resistance here for a little while, and not so much here, I don't think. Yeah, it's not too bad. There's some, yeah, there's a touch possibly there as well. Not quite. So there's a resistance point there. Broke it, acted as support, support, support. So it's just holding right here on this line. So I'm going to use this line because it looks okay. Let me see what else we've got. Even there, it's quite nice, right? So look, support, 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 became resistance, became support. So we could say that this is quite a nice line. And I'm going to use it. I'm going to say, right, let's stick this up here. And you could even possibly have something here. Yeah, it looks like a fake. So you had look, support, broke it, acted as resistance, and then kind of like a fake out. So I think right now, this is a daily chart, right? So it's difficult to kind of look beyond just trading in these little mini channels. Like I wouldn't be overly bullish and buying this. I mean, for me, as I said, guys, like if you want my confident opinion on where gold is going, I need to see this really break above here. Otherwise, we're trading ranges. If we close below here, then I'm going to expect this market to start to pull back. So it's quite a significant month right now. The other clues that you can look for is volume. Like you can see, for example, here, that was good. So this little scenario here is market pushes down, the volume increases. Market pushes up, the volume doesn't increase. So that's bearish. And you can see here that the peaks at the moment, yeah, the peaks are on the downside rather than on the upside. So the clue will be, one of the clues you can look for is where you can start to get really bullish on this is if we start to break above this line and you start to see some green volume here, that's going to be a clue that actually the buyers are stepping in right now and there's some interest coming in, which obviously we'll see if that happens or not. Where did this market pull back to? Did it get to? It's 1618. Yeah, look at that, guys. I mean, that's just, this is, so if you've done your, if you had done your A, B, C, D, the way we teach you, the market went from an A to a B, it went into the red zone, which gives us a red zone target. And look how accurate that is. It literally went there to the pip and has bounced. So you can see that these are working really nicely. So if this market is going to go lower, you can do the same thing for these moves here. So you can go A, B, and see where the market's going to pull back to, and then look for the targets that way. So if this market, for example, went back to the yellow zone, which looks like a possibility, this market would be going back to the yellow target right there, which coincidentally matches our old 200, which is a really powerful sign that 1600 is possible. So if this market is going to start to pull back further, I'd be looking for about 1600. So looking for a potential sell around 1790. So old resistance becoming support. And you'd probably want to place your stop above this channel line, just in case it kind of spiked a bit higher and then went lower, but or just above this high. I think,
mate, we've got 4 minutes left, so why don't you just dive into this one and do a...
That's more than enough.
Do you want to just jump in? You've got the 4-hour chart up. Do you just want to finish that off? And then obviously we won't have time for the FX pair, but if you were going to do that, then we've got a little bit of time for you if you've done something already.
Yeah, I mean, right, like not really. I mean, you don't. To be honest, I mean, right now, if you were looking to buy this, the thing that I would say is you'd probably do something like, it might be easier on an hour, actually. Let me show you on an hourly chart. So let's say, for example, you looked at this and you're thinking, yeah, that looks good. I think we might just push up there. Maybe I'll find a buy trade up to here. The way that you would do it is you let the day finish, or doesn't necessarily have to finish. Ideally, you want to kind of be looking for a retest of the one of these two lines here. So a retest would be somewhere like roughly 1719 or 1692, right? So 1719, 1692. So go to the 1 hour chart, stick those levels in. For those that want to buy this, 1719 would be there, and 1692 would be there. And I would just take the high point and just see where the 618 comes in. 618 is there. That's in our green zone. So anywhere between. So if you want to buy this up to 1790, that I think that's the. And I would even just come out a little bit before, as we were saying before, somewhere there. I would be looking for only to buy this in this zone. So only here. So anywhere else, it's not high probability. So you want to buy this in this zone, have your stop below this low, and then target that. And then I would then be looking for the reverse trade around 1790 to short this, potentially down to 1600. That's so. In other words, buy here, sell to here. That's in essence what I would be looking for if I was trading this. Okay, guys. Let me stop screen.
Mate, I could sit with you all day just going through all of this stuff. Imagine just being able to sit with Darth Demi going through currency pairs and gold and looking for this, mate. We're gonna have to work something out with that. That's pretty awesome. And that's not just me saying that. Jason saying genius. Ha! Nick, what a great mindset to have now. Now there are too many trades to choose from. That's where risk management comes in, my friend. And Brucey as well saying brilliant. Thank you very much, mate. So look, whilst we've got a couple of minutes left, there was a question that I saw earlier. I just want to scroll through. Here we go. It's from Zach. Going back to your question about scalping, he's just started doing scalping. How intense can scalping be if pursuing long term? I've started today and it's a bit to get used to, but I use my soldier training to keep my sanity. So I know how much you like ex-military folk and how you've helped them become pro traders in the past. So you've got that kind of kindred spirit with military folk. But for those of you that are new to the group, do you just want to tell them how long you used to trade in like day trade when you were doing the hedge funds and the trading floors? Like how many hours a day would you do?
Well, I was doing a lot. I mean, I was doing about 15 hours a day trading. Yeah, I mean, that was all I did pretty much for my day. So it's pretty intense, but the more you do, the more you watch price. It's not, you don't have to be in and out of the markets all the time, but it's about observing. The more you learn, and the more you learn about price action. So I mean, I must say that it massively improved my price action trading. So I can maybe even my intuition for markets, just because like it almost, they say 10,000 hours, but obviously you get to 10,000 hours of mastery a lot quicker if you're doing 15 hours a day. If you can hack that, most people can't. But,
or would want to. That's Darth Demi status.
I would want to, but I love trading. I love the markets. So I mean, if I had nothing else going on, I probably would still be able to do it now. It's just you've got to, when you have a love for something, it's not work. It's just you're doing something you love. So it's just like playing a game all day. So, but yeah, just do what you can. But yeah, your ex-military will definitely help in that sort of staying alert and disciplined, because you have to be for that. So yeah.
Cool. It struck me as you were saying that and looking at the news, like how America can post those strong numbers with what's going on with everything. This is like a real life video game, isn't it? And it's just the pattern recognition, knowing what's coming, using the news, the pattern recognition, the entry points. It's like a video. It is like one of the best video games ever, surely. Because it's not even real anymore. It can't, those numbers are not real, let's face it. So now it's just playing a game, right? Well, the game says this data, then we know it's going to do this.
Yeah, no, it is. I think for a lot of people, it will be that. For other people, it won't be that. For other people, it will just be a lifestyle. And that's fine as well. So like, you just some people you don't have to become that passionate to make money. Like, to become a master, you do. Like, to become an absolute master at what you do need to put the hours in. You need to fall in love with it. But to make money, you don't. You just need to be able to follow a process, a system, and have a strong enough why you're going to do it. And that's it. And make sure your life is filled with other stuff. And that's it. It's as simple as that. And you can build a really nice second income from doing this.
Awesome. Well, look, mate, thank you very much for dropping your knowledge bombs as per usual. I know everybody that's been on the live, they've loved it. And I'm sure people that watch the replay on demand through Facebook, they'll love it too, as per usual. We'll be back tomorrow, midday, for Crypto Like a Pro. And obviously the crypto news is never a dull moment. So we'll be discussing that. We'll be breaking down Ethereum and Bitcoin, seeing where that is likely to go over the short term, the medium term, and the longer term. I was trying to hold in a burp there and it wasn't going to happen. So it looked like I was having a mini stroke, I'm sure. But it was just a burp. Don't worry, guys. Is there anything you want to say before we bounce today, mate?
No, mate, that's all good. All good from my side.
Awesome. So, cool. Well, look, guys, enjoy the rest of your day or your night, wherever you are. Thank you very much for spending your time with us. And we'll see you tomorrow, guys. Have a good one.
Take care, guys.